There's a number of ways homeowners can kick the door open to homeownership. Creative finance strategies that circumvent the need for bureaucratic banks and standardized applications. In this video, we're going to do a concise but really hard dive into seller financing for new homeowners. So why does this apply to you? Well, after the 2008 crash, the bank did a 180 on how they think of small business owners, credit scores, independent contractors, and everything in between. I mean, customer service associates at Johnson & Johnson tend to get approved faster than entrepreneurs of $10 million companies. And that's not just fiction, that's literally my backstory. And we'll cover that stuff more a little bit in a minute. What we're gonna do in this video is just cover really the good, bad, and then the ugly about seller financing. One, what's my real motivation in doing this as a real estate investor, right? Like, why not just rent this thing instead? Secondly, why my buyers are going to buy from me on seller financing. Why would they do this if the terms are worse than going through a conventional bank? Next is a couple of reasons why you should really think twice before buying with seller finance. And then lastly is like what I am personally looking for when I underwrite and I seller finance a property to an end buyer. So, and even before that deep dive, let's first just acknowledge that seller financing, it's actually not the only non-traditional way to get into homeownership. For example, we love selling homes rent to own, which is an entirely different creative finance method to create homeowners. And you can check out our video on that one later. But most people generally understand why seller financing is attractive to the buyer. Okay, and we'll even dive into that as well. But before we even get to that part, why do I love seller financing to buyers? Like, why wouldn't I just rent the property instead of slowly selling it to somebody over time? Well, because I get to sit back and then just be the bank on the transaction. I mean, this is really the epitome of mailbox money. When a homeowner's air conditioner breaks, do they call Bank of America to come fix it? Of course not. No, I mean, it's their house. Seller financing is one of those things that's awesome for investors that might not want more assets to manage or in a particular area or whatever it might be. So when an HOA calls to moan about why the lawn isn't mowed, they're going to call you about it, not me. I mean, it's literally not my problem anymore because the house is yours. So why would somebody want to buy a seller financed home? You're probably going to pay a premium price for the house and a super high interest rate. So why would you ever do something like that? Well, because you probably can't get a conventional loan for this house on your own. Small business owners, independent contractors. I mean, maybe you've only got a green card. You're a first-time buyer, had a past bankruptcy during the last housing crash. I mean, it's nearly everyone, though, that just doesn't fit into the bank's traditional lending box. And really what the bank is looking for here is pure, unadulterated stability. And that kind of brings up that second group that banks really shy away from, which is what I would call the seasoning error group. Like, are you recently divorced? Did you get a job transfer? Moved to a new city? I mean, God forbid you missed a car payment, right? Maybe even you have a really stable job and you just don't have the perfect credit. Past foreclosure or bankruptcy. I mean, any of these situations and more, good or bad. Like, the bank says your stability only gets proven through what we call seasoning. Yep, I mean, for a period of time, the bank is going to hold any and all life changes against you. And even if those are good changes that are in your life, they want to know that they can kind of underwrite your exact situation right now that's going to be in place for the next 30 years, optimally. So any change to your life really is counted as a negative feature for the underwriting department for these large banks. Hey, if you're appreciating some high-level honesty and pragmatism out of this video, shoot me a like and subscribe. I mean, it'll help me know to continue making more videos like this one. So here's where I come in. I won't only just sell you a house, I'll also finance it for you. Like, this isn't a rent-to-own situation where you eventually need to, still qualify for a mortgage. No, I mean, just you're going to make payments directly every month, and at the end of that period of time, the house is now fully yours. All right, that sounds pretty great. So why shouldn't you do this? There's two huge reasons I think you might want to think twice really, before buying a house, seller finance. The first one is that you're probably going to pay a premium price for this house, like often more than what the normal market would bear. And then secondly is you're definitely going to pay a higher interest rate on the house. And this isn't, credit card predatory rates, but it's definitely going to make it worth my time in selling you one of my homes, right? So if you're someone that doesn't fit into the bank's lending box, then you can still probably see why this would still be such a blessing for families. Would you rather keep renting a house that isn't yours and have none of your monthly payment go towards the equity in your own in a home? No, of course not. Renting is essentially just like a massive interest-only loan, and then at the end of it, they don't even sell it to you. It's so with seller financing, even if the terms aren't as good as someone with an 800 credit score going through a traditional bank, you're still buying the house. But the other thing to remember here is that seller financing doesn't have to be your permanent solution. As soon as you can qualify for a conventional loan, then go on ahead and then refinance the seller out, someone like me out, right? Seriously, it's not my decision anymore because you are the buyer. You own equitable title to the home. I'm just the bank on the transaction. So if you find a bank with a better interest rate, then just go refinance it with them. All right, so what am I looking for in a buyer when I seller finance a property? Well, things like credit score and how you make your money are a lot less important to me than it would be for a bank. The things that I really need, one, I need a large down payment, right? Something substantial, like enough money for me to know that you've got real skin in the game. I really don't want to have to come and retrieve my house back after I just sold it. And then secondly is, I need to perform an affordability analysis. Actually, a third party does, according to Dodd-Frank, right? So I need to know that you can fundamentally afford the monthly payment. So as I said, I will use a third party to do that affordability analysis based on your income and or bank statements. And really that's just to confirm that I can count on you making timely payments until this house is paid off. Now, if you're ready to jump straight into homeownership, go check out the next video about how we actually qualify buyers we seller finance to. I've said this in other videos before, but far and away, one of the most amazing things that we do as a company is we create homeowners. Do I make money on the deal? Absolutely. But by taking risks that I do on buyers, I also create a unique opportunity to forge a new homeowner who maybe was years in the making from that point. Hey, if you were about this video and feel like you may not be ready for home ownership quite yet, go check out the video on our rent-to-own program. Either way, stick it out and chart your path to home ownership and contact us directly through the website. It's right there in the description below that you can get a link to it. And let us know if there's any way that we can help.